क्यों पापा, बढ़ गई ना दुकान आगे?
हाँ बेटा, अब तक सबकी खुशी के लिए मिठाई खिलाई है, मगर आज अपने बेटे के हुनर के लिए खुद खाऊंगा।
जब खिलकर निकलता है स्किल, तो सलाम करता है हर दिल। DSEU, इंडिया की पहली स्किल एंड एंटरप्रेन्योरशिप यूनिवर्सिटी, जहां ऐसे कोर्सेज में हैं डिग्रीज और डिप्लोमास जो बेटर फ्यूचर की ओर ले जाएंगे आपको। तो एडमिशन के लिए अप्लाई कीजिए।
स्किल है तो नहीं कुछ मुश्किल है।
Dark is here to rule.
The Dark Range from Tata Motors.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and time to bring our experts on board. And we have Kunal Bothra as well as Vijay Chopra joining us. Good morning, Vijay, as well as Kunal. Thank you for joining us on Buy Now, Sell Now. And we'll get on board our first viewer query also. This one is coming from Satish. He's talking about Naukri, that is Info Edge. He's purchased at 4,700 rupees per share. He wants to know whether he should hold or sell in the shorter term period. Kunal, I'm sure over the next couple of days we're going to get a lot of queries on Info Edge, on Zomato. But for now, what should Satish do? Should he continue to hold on to it, or should he go ahead and book profits?
Good morning, Cheryl. I think you should continue to hold on to Info Edge or Naukri. The stock looks extremely strong. It's gone through a phenomenal rally in the last 12 months, and then a phase of consolidation as well over the last couple of months as well. So I think the stock has shown those typical characteristics of being one of the strong performers, as well as being able to consolidate without too much of a price damage. So I think this is the hallmark of quality stocks. I would suggest a hold. Since you bought at much lower levels than the current market price, you're already sitting with a lot of buffer for yourself. So I would suggest a hold on Info Edge.
Okay, this second question, I think I'm going to ask this for a lot of people. One or two have asked this already. But Vijay, coming to you on this one, those of our viewers who have gotten an allotment in the Zomato IPO and at the stock price of 130 or 135 or thereabouts, should they book right now and then look for lower levels, because there's a lot of froth seemingly right now?
Well, Alex, you rightly mentioned the word froth, and I see a lot of froth in Zomato. I see a lot of froth in the markets. So it's better to book and sit on cash or sit in fundamentally strong stories or undervalued stories. I see still a lot of value in metals, and I see a lot of value in healthcare stocks, where things can change, especially the MNC pharma companies, and of course, good mid-cap IT companies. So I think that it's high time, although whoever has invested have made a great killing, great money here. So it's better to book out and shift to safer havens. And I am also expecting some kind of a correction which is around the corner. We have seen some correction in the last few days, but this correction might deepen, and this would be healthy for the market. Because we have seen almost a one-sided move. So bull market corrections are always good for new entrants, and also for those who want to invest fresh money. So we have seen an exodus of money from the FIIs. But I think that if at all we need fresh money or fresh infusion from FII, especially, the markets need to tone down a bit. And I think that Zomato, most of the major FII players were there, invested in this company, most of the big PE players of the world. So they would also exit, and retail investors should also exit. And it's a good time. Retail investors have made a lot of money, but the party, it doesn't last forever. So it's as they say, when you are in a party, you dance close to the door so that you can get out whenever possible. So just book out and enjoy your profits and wait for either lower levels or get into fundamentally strong, undervalued stories.
Okay, this one is coming in from Sumit. He's saying he's bought Tejas Networks at 180 rupees per share. He's saying for a long time the stock continues to be in a range. He's asking whether he should add some more or should he exit his current holding with a view of mid to longer term. What's your view, Kunal? What should actually Sumit do with Tejas Networks?
Well, I think I would advise to hold on to Tejas Network. It's a stock which is consolidating. Yes, the last 4 months it's gone through a grinding range where the stock has gone through a pivot. 180 plus or minus some 10-15 rupees has been the range for Tejas Networks. So I believe that the stock is consolidating for good, and you can see a potential breakout yet again on the upside. It's a matter of question or a matter of time when would the breakout happen for the stock. But if you're patient enough, then I think the probability of a breakout on the upside seems to be high. The volume patterns are quite interesting for Tejas Networks, even this phase of the last 4 months of consolidation. So I would suggest a hold and watch out for a breakout. If the breakout happens about those 210, 215 kind of mark, then you can expect probably a level of 240 to 50 over the near to medium term.
Vijay's analogy about dancing at a party wouldn't apply to me because I'm never a good dancer. But the next question is on Bank of Baroda, and this one's for you, Kunal. So we've got Rajan, who's bought at levels of 81. And he's been holding for about 2 months. He's asking for the outlook for the next 6 months.
I believe it's better to switch on to maybe an SBI from the same space, Bank of Baroda, and these other PSU bank stocks. They have not been able to convert their momentum rallies into very strong periods of trends, and I think that's been one of the key reasons. Now, if something changes dramatically in the PSU banking names, say over the next 3 to 6 months in terms of news flow, in terms of the results, etc., then it's a different ball game altogether. But purely on the charts and looking at the historical reference points for stocks like Bank of Baroda, I think it's prudent enough to try and make a switch and maybe try and look at SBI at current levels. The stock looks very formidable, and I think 400, 420 seems to be a good accumulating zone as well for the stock for medium to long term perspective.
This query is coming in from Luke. He wants to know whether he should buy Mastek at current market price for the longer term. Kunal, how does Mastek look on the charts? It makes sense for Luke to go ahead and buy it at the current market price for the longer term?
Well, very tough, because the stock is already perched at multi-year highs for itself. It's been one of the few stocks which have done phenomenally well. In fact, the overall IT space, mid-cap IT stocks have done exceptionally well, but Mastek has been one of the few stocks which has not even broken below its 200-day moving average since quite some time. So the stock has done exceptionally well. The concern with the chart is that the monthly RSIs for stock like Mastek has reached to exorbitant kind of levels. I think the RSIs on the monthly time frame is close to 93, 95 levels for the stock, which is extremely overbought in nature, and such kind of high RSI levels, they don't stick around for too long, and you typically see the stocks going through corrective phase. So for a fresh entry, I would advise and avoid, and would wait for a significant amount of corrections, or if the stock goes through a cool off where the RSI cools off significantly, that could amount to maybe 6 months or 9 months of a time-wise correction. So either of that happens is where you should look to enter, not at current levels.
All right, earlier in the week, at the start of the week, you saw quite a bit of a correction in the metal stocks, but this one specifically is about the steel majors and those making specialty steel. This one's for you, Vijay. Santi is asking about which company or which companies will benefit the most from the government's latest PLI scheme in the specialty steel space.
Welcome move, and it was expected also that especially post whatever is happening with China, that the government would take certain steps to boost the steel companies, and especially so post this PLI story, I think that the steel companies should do well. So if you ask me, I think that not only those only in the specialty steel, but I think that there are other companies also which should do well. So there are companies like Vardhaman Special Steel which should do well. I think that Tata BSL is also one of the companies which is quite undervalued. It should do well. Tata Steel is the industry behemoth and stands at the top of the pie. I think Tata Steel should do well. All the JSW companies, JSW Steel should do well. Apart from that, there are companies like JSL Hisar and Jindal Stainless. These companies should do well. So a lot of opportunity in the metal sector, I guess. And the best pick right now, I think that in the metal space, which I have, is not a steel company, but a Government of India company, Hindustan Copper. It looks fantastic on the charts. So it can be bought with a longer term perspective. So I think that metals should do well, and they are in a long term bull run for another 2-3 years. So stay invested in steel companies and quality companies.
This query is coming in from Matthew John, and he wants to know whether for the longer term should he look at Muthoot Finance or Manappuram Finance. Which of this is a better one, Vijay, according to you?
Manappuram is well placed on the charts as well as fundamentally. So technically speaking, there's a golden cross which has just been made at around 165 rupees. The stock is at around 190. So I think that in a correction, again I would say in a correction, because the stock has quickly run up 30 rupees in a very short span of time. So in a correction, one should buy Manappuram, which looks much better on the charts. And fundamentally also because the valuation, Manappuram doesn't hold that kind of a valuation which Muthoot does. So Manappuram has that valuation gap which it needs to cover. So if somebody buys at around say 170, 175, it would be a good buy for a target of about 230, 240.
All right, Mukesh is asking about Z Entertainment, Kunal, and he's saying give him a stop loss or target, but I suggest you should give him both for 2 months.
Okay, so I'm not sure of the buy price, but I think if you bought at say current levels, for example 205, 210 kind of a range for Z, then I would expect the stock to try and pick up pace. What had actually happened for Z was around a week and a half out back, there was this phenomenon of golden crossover where the 50-day moving average had crossed back above the 200-day moving average for Z. Now, typically when that happens for stocks, we expect that the stock gives you a bullish kind of a trend, but because of the market volatility, the stock had corrected from 210 to 200 levels, and it's now bouncing back again. But this golden crossover phenomena seems to be very positive for Z, and if the stock sustains and doesn't break this 200 mark, then I believe you should eventually see a strong pickup of trend. So purely on that aspect, I would suggest a hold on Z. And in terms of stop loss, I would suggest 198 as a short-term stop loss. And for targets, I think you should keep it closer to 225 to 30 range. But as I said that if the breakout is more of trending in nature, then you can keep on revising the targets higher depending on the way the stock achieves those kind of short-term price levels. 225 to 30 should be the first level of point which you should keep a mark on Z for a short-term trade.
Okay, this one is coming in from Tony Joseph. He wants a technical view on Strides Pharma, which he's purchased at the level of 810 rupees per share, and Jubilant Pharmova, which he's bought at the price of 755 rupees per share with a 3 to 6 month horizon. Kunal, what's your technical view coming in either on Strides or on Jubilant Pharmova?
See, I think both these stocks, for example, Strides and Jubilant Pharmova, both of these stocks are now trading below their long-term averages, and it's not as if that these stocks have broken very recently. There was a phase when the markets loved and cherished the mid-cap pharma stocks, but somehow in the last 3-4 months the action has gotten very, very stock specific. You don't see too many pharma stocks participating even if the markets are consolidating, correcting, or even continuing to move up higher. So that's a signal that the pharma index is likely to consolidate for some more time. So if it's a very short-term oriented query, then I believe there could not be too much of an action coming out into both of these stocks. They could remain sideways. The participation levels could drop in the markets for the next couple of weeks or the next couple of months for both of these stocks. So if you're in from a short-term perspective, then I don't see any major action coming by. But eventually, once the consolidation gets over, you should see the stocks breaking back above their long-term averages, as well as restarting a trend for themselves on the upside. So depending on your time frame, if it's short-term oriented, then I don't suggest any major tweaking in terms of your holdings. But if you're in from a longer term view, then I believe buying on dips could be a good strategy for both of these stocks.
All right, gentlemen, I hate to ask you to curtail your answers, but we'll need to do that in order to take as many more questions as we possibly can. We've got Neeraj asking about Tata Motors. He's got 1,000 shares at levels of 310, Vijay, and he's looking to hold for 1 year. Should he do so?
Well, I think there is something opaque which has happened in Tata Motors. The buzz was that some people, a major team which was in the design and engineering vertical, they left, and the stock suddenly fell down. So it was not only the chip shortage we are talking about. So whenever I cannot see through a stock or a company, I generally would recommend and avoid. So if at all you have not entered into this stock, so better avoid. And just wait for the good times to come. Secondly, we have to. I just want to mention something about the auto space. Looking at the Bajaj Finance numbers, we have seen that there have been NPAs around two-wheelers and auto numbers. So I would say that we have to watch this sector for some time. And I would better buy it when it revives. So Tata Motors, as of now, I don't think is a buy. Just wait for things to settle down and let us have some clarity.
This one is from Kaustubh, and he wants views on IDFC First Bank and ICICI Lombard. He wants to make fresh entry at a current market price for a minimum tenure of about 1 to 2 years. But we'll just take IDFC First Bank due to paucity of time. So Kunal, what's your view on IDFC First Bank? Makes sense for Kaustubh to go ahead and buy at current market price?
Very bullish on the stock. Breakout over the last 5-6 months was seen for IDFC First Bank about the 35-37 mark. So I would suggest that if you're in from a long term haul, should be a good prospect for the stock.
Would you buy Kaveri Seed, Kunal, at this current level? Parth is asking.
Well, I think at current levels it looks to be sort of a better risk reward play for Kaveri Seeds. Come back towards a major support around the 700 mark. But the chart patterns are a bit volatile. So even if I have to suggest a buy, I would suggest that you have to keep your position size a bit limited, because it's a very, very high beta stock and it tends to give you those whipsaw moves in between. So it's possible that the stock may go through a corrective phase first before it starts to pick up a rally. So that could be the only issue with the charts for Kaveri Seeds. But other than that, I think at 700 kind of level seems to be a good risk reward to buy the stock at current levels.
From Mr. K.R. Balan, wants to buy 200 shares of Tata Coffee and Tata Power for the medium term. He wants to know whether he should go ahead or should he look at realty sector, that is India Post Realty or Brigade Enterprises. Kunal, makes sense for someone who wants to invest in Tata Group companies to, rather than invest in that, look at realty sector?
Both of them are completely different prospects. Tata Group of stocks, Tata Coffee, Tata Power, they're looking exceptional on charts. Many of these stocks have given almost 4-5 quarters of straight and strong price performance. So the expectation always is that whenever you see such kind of a 3-4 quarter rally, the trend gets converted into more of a longer term play. And typically these stocks are very low beta, or I would not say low beta exactly, but moderate to low kind of a beta for these kind of stocks. So they come out to be good portfolio constructs over the long term. Real estate stocks, they're in the trend right now. The market seems to be buzzing in favor for many of these real estate names, but the only caveat is that these are very high beta stocks, and then they can go through very sharp periods of rise as well as sharp periods of correction. So completely two different set of stocks. I would suggest that if you can probably look at additional capital and then look at probably investing into a few of the real estate names, that would be a much better strategy rather than selling off your Tata Group of stocks and investing into this high beta pocket.
Interesting point there. And by the way, Chris Wood has said that he's quite bullish on the real estate space in India. Let's take the next question on Infibeam, and this is coming in from Sundaresan. He's already holding 2,000 shares at levels of 50, which is not too far away from the current market price. Should he hold on though for the medium term?
He should exit ASAP is my call. I don't see a major business model in Infibeam. And whenever there is no clarity on their business model, I don't think that one should stay invested. So I would recommend a sell on Infibeam.
Okay, this query is coming in from Sneha Sheesh, and she wants to understand whether, or he wants to understand whether the investing idea was right. So basically, he incurred loss in Interglobe and transferred that amount to Bombay Burma. So he wants to know whether that strategy was right. Does it make sense to stay put in Bombay Burma, Kunal?
Well, I think it makes sense to invest, into Bombay Burma. I think even though the switch may not be an exact or a like-to-like switch, as such because of the sector differences, but nevertheless, I think Bombay Burma by itself seems to be a good chart. The stock is just about trading above its long-term averages. Its construct, over the last 2 to 3 months seems to be improving quite strongly. So I think purely on the merit of charts for Bombay Burma seems to be an interesting prospect. And if the stock breaks out, you could probably see a potential, rally towards almost 1500 to 1550 over the near to medium term. So I think Bombay Burma by itself looks attractive on the chart, so I would suggest a hold.
Kunal, I'm asking about Saxoft, which is a micro cap company trading at just under 700 rupees currently. If you have a view, would you suggest that it's a good entry point for the medium term? Peyton is asking.
Well, I don't track the stock that often, Alex, but yes, I was looking at the charts for many of these IT-enabled services stocks, and even this stock has done exceptionally well, like the routine IT names which have rallied more than 5x, 6x. Even this stock has rallied from 120 levels to almost 690, 700 where it's currently trading. So done exceptionally well. And as I said earlier, that maybe the entry points for these stocks may not be a best entry point because of their very high nature of overbought indicators. So you have to wait for a sizable amount of correction to try and enter into these names.
Okay, this query is coming from Sherry, and she had asked this query, I think, at the start of this week or last week, saying that she's losing about 90% in Cadila July 670 call. Should I average or leave it or exit with remain 10%? Kunal, what's your view coming in on this? What should Sherry do with Cadila July 670 call?
See, I think if I'm not wrong, I had mentioned that time as well that the stock needs a breakout above 650 levels. Only a breakout above those 650 levels could probably change the prospects for Cadila, and trying to buy a deep out of the money call option for a stock which is consolidating seems to be a bit tricky. Typically, I think the best way to try and buy a call option is when the stock is confirming a breakout or just confirmed a breakout on the daily time frame chart. So I think now the investor or the viewer has to probably wait for retrade above the 650 levels. Only above that is where I believe it makes sense to buy an out of the money strike option for Cadila.
Okay, my apologies to everybody who hasn't gotten their query answered. Unfortunately, we're running on very short timelines today. I'd like to thank both of our guests today. We've got Kunal as well as Vijay. Thank you so much for taking the time. Have a lovely Friday and an even better weekend. We're slipping into a short break. More on the other side. Do stay tuned.